Hey guys, it is Julie here with TipRanks. In today's video, we're looking at two stocks that score a perfect 10. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're looking at two growth stocks that come in with a 10 out of 10 score on the TipRanks Smart Score. This means that they are most likely to outperform the overall market. In today's video, we're going to take a look at what these companies do and how the analysts weigh in. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button, and don't forget the next time you're on the TipRanks website to check out our new community page. This is located on the left-hand side of any stock that you're looking at, and it lets you share your opinions on current stocks and see what other investors have to say. So make sure to check it out. All right, let's get right into these two growth stocks. First on our list today is the well-known semiconductor giant NVDA. Their stock trades under the ticker NVDA and is currently priced just shy of $300 per share. And they come in with a 10 out of 10 due to increased hedge fund activity, positive technicals, and bullish blogger and news sentiment. NVIDIA is an American multinational technology company. Their invention of the GPU in 1999 sparked the growth of the PC gaming market, redefined modern computer graphics, and revolutionized parallel computing. More recently, GPU deep learning ignited modern AI, the next era of computing, with the GPU acting as the brain of computers, robots, and self-driving cars that can perceive and understand the world. Their creations are loved by the most demanding computer users in the world: gamers, designers, and scientists. Their work is at the center of the most consequential megatrends in technology. And their NVIDIA AI is now ready for every enterprise. They have frameworks for smart cities, healthcare, conversational AI, recommenders, video conferencing, robotics, and cybersecurity. The company is expected to release their most recent quarterly earnings report on November 17th. Their last came out near the end of August. During their second quarter, they saw 15% quarter-over-quarter revenue growth and 24% quarter-over-quarter growth for both net income and diluted earnings per share. For this third quarter, analysts are forecasting an earnings per share of $1.11. We've had multiple analysts weighing in on the NVIDIA stock ahead of this upcoming earnings report. One of those is five-star analyst Rick Schaefer from Oppenheimer. And he actually doesn't view the earnings release itself as a likely material catalyst in the near term, but says that they remain long-term buyers. NVIDIA remains the industry leader in high-performance gaming and is ideally positioned for sustained structural growth led by data center and AI. We also heard from five-star analyst Christopher Rowland from Susquehanna. He writes that we expect another beat and raise driven by continued strong GPU demand and modest share gains in the quarter. And we note NVIDIA is one of the fastest growing companies in many key growth areas, such as cloud, autonomous vehicle, and metaverse. And we deem it warrants a higher multiple than the rest of the peers. Altogether, the NVIDIA stock has 22 analyst ratings and comes in as a strong buy based on 20 buys and 2 holds. The average price target comes in at $300.25. That would be an upside potential of just 0.09%. And I know what you're thinking, that that's hardly any upside potential whatsoever, but hear me out. If you take a look at our detailed list of analyst forecasts, you can see we have a mix of upside and downside potentials. But looking closer at those downside potentials, they're all from over a month old, many of them 3 months old. So they did have buy ratings, but their price targets have already been well exceeded. If we look at our most recent ratings, specifically from this last week, you'll see that they're all in the green. We do have a low-end hold of just a 0.26% upside, but we have many coming in between 16 all the way up to 33%. So our real recent average upside would probably be around the low 20% mark. And it is very likely that following this next earnings report tomorrow on the 17th, we'll see a lot of those older ratings from 3 months ago become reiterated. Now, the second stock we're looking at is a company called PRVA Health Group. Their stock trades under the ticker PRVA and is priced at $30.80 per share. They also score a smart score of 10 based on strong buy analyst ratings, very positive TipRanks investor sentiment, and insider activity. PRVA is a technology-driven physician enablement company. They elevate the patient-provider relationship by delivering tools, talent, and technology built to transform healthcare. PRVA is building the leading next-generation physician organization and care delivery network. They partner with all provider types, regardless of affiliation or ownership, in all reimbursement models across all geographies. Their solutions include technology and population health, management services organization, single TIN medical group, accountable care organizations, and network for payers and purchasers. Their current market presence includes over 2,800 implemented providers with a 95% provider retention rate. They have over 3 million patients and in 2020 had over $1.3 billion in practice collections. And you can see that their platform is scaling rapidly in multiple areas, including their implemented providers, attributed lives, and practice collections, where they're targeting a long-term growth rate of 20% or higher. Their most recent earnings report just came out on November 7th, where the company posted a lower than expected loss than anticipated. They also saw their practice collections increase by over 18% and their adjusted EBITDA increase by almost 52%. Raising his price target on the stock was 5-star analyst Richard Close from Canaccord. He bumped his price target up to $50 from $44, believing that the company's differentiated model can produce long-term sustained growth and share appreciation for investors. He is one of 7 analysts that have a rating on the stock, and it comes in as a unanimous strong buy. The average price target comes in at $42.43. This would be an upside potential of over 37% for the next year. On the low end, we do have one price target with an upside of just 3.9%, but we have multiple above the 50% growth mark, with one on the high end being a $51 price target, which would be growth of over 65%. So there we have 2 stocks that score a 10 out of 10 on the TipRanks Smart Score and with some pretty bullish outlook from analysts. Now you guys know I always love hearing what you think, so let me know your thoughts on these 2 stocks in the comments down below. Were they on your radar already, and what do you think about their future growth potential? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.